Hi everybody, it's Pierre, your favorite CPA. So I've been getting a lot of questions about cars, and cars are great, especially out here in Southern California. You can get you a nice drop top, you can use it to show off, and so people want to upgrade their vehicles. So here's some things I want to share with you before you consider purchasing a new vehicle for your business. There are two options that you have in writing off business vehicle expenses. The first one is one most of you are familiar with. It's going to be the mileage method, where the business miles that you use are written off. The current rate for writing off business miles in 2018 is 54.5 cents. Did you know that you can also write off miles for charity events? Those are at 14 cents. And then for medical and moving expenses, those are at 18 cents a mile. Regarding moving expenses, just be aware in 2018, only military personnel can write off their moving expenses. And then if you have any personal or commuting expenses, just know that those are not deductible. And then the other method that some people use is what we call the actual method, where you're using your actual expenses such as your fuel, your repairs, your maintenance, your insurance, your tires, and depreciation, or if you're leasing, the portion of your lease payment that relates to your business usage. So for instance, let's take a $40,000 car, since that's what cars cost these days. Under the old tax rules, a $40,000 car, if you had it for 5 years, you would be able to write off $15,000 off that car. And then it would take you, unfortunately, another 14 years to write off the rest of that car, meaning it would take a total of 19 years. So if you bought a car last year and you plan on keeping it for 19 years, you might feel pretty sad, because by then cars are gonna be self-driving and flying over your head while you're driving out here on the 5. However, thanks to the Tax Jobs and Cuts Act, or we know as the Trump tax law, now if you buy the same vehicle at $40,000, within the first 3 years, you can write off up to 89 to 90% of value, because Congress increased the depreciation amounts on the cars. Plus, in year 1, you can get bonus depreciation of up to $8,000. So, which method is gonna work for you? Here's some things you wanna think about. The vehicle that you want to use, you want to be aware of the miles per gallon. And if you decide to purchase a new vehicle, you want to factor in the bonus depreciation. And just remember, when I say new vehicle, you're allowed to purchase a gently used car, and it's considered new to your business. So you don't have to buy a 2018 to 2019 model. You can purchase a 2017, 2016, 2015 or older, as long as it's considered new to you and your business. Also, you want to factor in your repairs and maintenance costs, and for some of those luxury cars, those costs tend to be higher. And then how many miles you expect to put on the vehicle each year. Now, I'd mentioned leasing earlier. Leases are a great way for you to write off your vehicle expenses if you like to lease, but just remember, leases are limited in that the dealership typically only lets you drive 10 to 15,000 miles a year, and if you go over, that cost can get very expensive when you hand that car back. But for those of you that have a regular car, you can also consider leasing a vehicle for more low mileage situation, or more special occasions, such as you're selling a very high-end listing and you're looking to attract a certain type of clientele. You can also use that second car for special meetings or other events that are business related that allow you to write that cost off. So for more questions or solutions on what is best for you in acquiring a new vehicle to help you impress your clients and make more money, give me, Pierre, a call. My team and I, we're here to help you keep more money in your pocket and less Knuckle Sam's. Take care.